It is time for Money Tuesday. You know, if you'd like to get help to start managing your money and investing, but don't know where to start, a fiduciary could be the answer for you, but it's different than a stockbroker. We'll explain that with Marshall Clay from the Welch Group. Marshall, good to have you with us this morning.
Hey, good morning.
Yeah, so explain first the difference. What is a fiduciary?
Yeah, so a financial fiduciary has a legal obligation to act in their client's best interest. And I think our viewers would be surprised to know that there's only a small percentage of the financial world that actually operates under that legal standard. Most people operate under a suitability standard. So when you're dealing with a fiduciary, you're dealing with somebody who's operating under the highest standard under the law.
And why is that so important, though?
Well, I think you're trying to strip out as many conflicts of interest as you possibly can. The financial services world is vast. There's a lot of complex financial products out there that people can sell you that are very confusing, not only to the consumers, but for people who work in the industry for a long period of time. There's a lot of them out there. So you want to work with somebody who you know is entering the relationship with your best interest at heart.
Yeah, and usually they're going to make money when you make money. But break it down for us. In terms of everything they need to know about a fiduciary.
Yeah, so there's a couple of things you should expect, and the first thing is clear communication. Communication not only about how they make their money. I always say, look, if you understand how someone makes their money, you'll understand where their motivations lie. So whether they're a fee-only advisor, where they get or where they charge a flat fee, whether they work on straight commission, or whether they're more of a hybrid approach, which is known as fee-based. That's super important. The scope of their services, what are they going to offer you? Are they just pure money managers, or do they do comprehensive wealth management where they look at all the different issues? And then how they're just going to communicate with you on an ongoing basis. What's their responsiveness going to be? If you call them and they don't call you for 3 weeks, that's probably a
big red flag.
Yeah,
right
it's probably a relationship you want to redo.
And a fiduciary, they're required to disclose information about commissions, right? If they're trying to sell you a certain product, a stock product, they have to disclose that, right?
Absolutely. They have to divulge those conflicts of interest. And I think that probably the most important, this is where I see even financial fiduciaries getting in trouble, is you should expect a desire for context before this fiduciary or any money manager actually starts investing your money. So what do I mean by that? So I met with somebody a couple of weeks ago, and they had thousands of dollars of credit card bills that were racking up, numerous, interest rate charges. They had all these other short-term things that were demanding on their capital, but yet their advisor had never asked them about any of these issues. And so a fiduciary should be delving into that, even if it's a pure money manager relationship, because they're supposed to be operating in your best interest. And if you're paying 24-25% on a credit card, you may not need to be managing or investing any money. So that's just kind of an example.
All right, well that's a good game plan to follow then if you're needing some help out there getting a fiduciary. Thank you so much. Appreciate it, Marshall.
Welcome.